Welcome to our November edition of Up to Speed. My name is Mike Motter, and I am the dealership industry leader for Baker Tilly. If you did not see our October edition of Up to Speed, you may want to view that video prior to viewing this one, as the October edition started our series on disaster recovery, and we talked about how to prepare for a disaster if one should ever happen. In today's Up to Speed video, we're going to talk about the disaster has happened. What now? If you missed last month's edition of Up to Speed, you can see that and other past episodes at our website at bakertilly.com/dealerships. With me today is Tom Kline from Better Vantage Point. If you have been a regular to these Up to Speed videos, you may remember Tom from our October episode as well as our episode back in June of 2022, where we had discussion on dealership risk management. Tom, glad to have you back with us again today.
It's great to be here, Mike.
All right. So we also have another Tom with us today. So with us today is Tom Garvey. Tom is a senior manager with Baker Tilly's Consulting Group and specializes in forensic accounting in the area of analysis of claims related to measuring damages for companies impacted by natural disasters. Welcome to our session today, Tom.
Thanks for having me, Mike.
All right, Tom Kline. So I'm gonna say both your last names so I can keep everything straight here. But Tom Kline, I'm gonna begin our session with you. In our last episode, we discussed what a dealer can do prior to a natural disaster actually occurring. One of those items was obviously having the proper insurance in place. Can you quickly discuss what some of those coverages might be and how a dealer might go about determining the coverage limit that they should have?
Sure. Great question. So the two things, there's two kinds of insurance I would focus on just briefly to answer your question. One is your business interruption coverage, and determining on your business interruption coverage, first of all, whether sales is included. Sales is often excluded from some of these policies. So you have to think about, if you did have a problem, would you be able to get your sales department back up and running quickly? One of the things I advocate is have the number to the GE trailer or whatever portable office you could get, hauled into the dealership in a very quick way in 24 or 48 hours. And also consider having, if you're in an area that's prone to hurricanes or prone to tornadoes or any of these natural disasters, consider having Starlink, a subscription already to Starlink. It's about 120, 130 bucks a month. It's like $700 worth of equipment charges, but you could just have that sitting there in case you don't have internet or utilities are down, assuming that you have power or you have a generator to do that. You could be up and running in a GE trailer with with the generator and with the Starlink. But going back to your question about insurance, your business interruption coverage, how long you think it would take you to get back up and running. So if your service department got leveled, how many months of salary would you need for your technicians to keep them on the payroll while you were rebuilding? That's really one of the key areas. And then, of course, on the dealer's physical damage coverage, considering analyzing whether you have an aggregate, and an aggregate is that number where it would be the maximum amount you would write a check for if you had a total loss of your inventory. That caps the amount of money that you would pay. So those would be the two areas I'd really focus on primarily for your question.
Okay, perfect. Thanks, Tom. So, all right. So the disaster has occurred. Okay, can you walk us through kind of the steps that should be taken in order to submit a claim?
Sure. So first, I think you have to, and this is pretty obvious, but anoint a point person who's going to keep track of all the expenses, keep track of the accounting, make sure it all goes into one account so that when Tom Garvey or someone like Tom goes in to try to analyze it, it's pretty easy to get your hands all around that. And then as quickly as you can, figure out the quickest way that you can get back up and running. And then refer to your insurance policy to see what's covered and what's not. Have your insurance professional go over that with you beforehand if that's possible. And if not, then they'll quickly be able to help you with that. And take a look at the policy yourself. I've seen many instances where insurance claims are put in, the agent doesn't necessarily have a complete command of what the policy says. So I would also say trust but verify as part of that whole process.
Okay. And Tom, I don't remember if I asked this question on our last episode, but I heard it somewhere. I don't know how much validity there actually is to it, but I had heard that if you look at the states down in Florida where they've got the hurricanes coming through all the time. And all of a sudden, hey, this hurricane now went up to a Category 5 hurricane and it's hitting tomorrow, to call your insurance company that day and submit a claim, even though you haven't been hit yet, just to get the process going. Because what I've heard is that once the hurricane happens, everybody's then submitting for the claim. So you might not be first on list or down quite a ways to get anything to actually happen. Is that true, or I heard it somewhere. I don't know how true it is or how accurate it is, but
I don't necessarily think that's a great practice, but I tell you what you can do. A lot of carriers, when it comes to your automobiles, will have coverage to move the vehicles. And some have caps of 50,000, some have caps of more, some will let you move your whole inventory out of harm's way. So I would know if you hear of a storm brewing, first thing I would find out is that a coverage that you have? Because the best protocol is you get your most expensive inventory and you call a car hauler, or if you don't know somebody, you can call me and I'll connect you with some. You call the haulers, you have to find a location where you can haul them to, of course. This takes a minute to put together, and it's always better if you've already done that and say, hey, look, if I needed a place to store 100 cars for 3 days, what would you charge me in rent? So that you can then activate that. Get the cars hauled, over to that location. Put the most expensive inventory in your service bays and on your showroom. Pack them as much as you can and keep the least expensive inventory out on the lot. And you've essentially put the carrier on notice. But as far as putting a claim in before you have one, I don't think that's a great practice. There's enough time and space and energy when you put in a claim. If you need the insurance company to get there, you can use your leverage and get them in there to fix whatever you need to fix.
Okay, sounds good. So, when you're advising dealers, what are some of the things that you advise that they should submit in their claims?
I'll answer part of that, and I'm gonna kick that over to Tom Garvey in part. But I mentioned incidental expenses, all your hard costs, some of the incidental costs that you have, whatever they are, just keep track of them. And I would say you submit everything and then argue about whatever it is they say that they're not going to cover. Tom, do you have a different opinion on that?
No, thanks, Tom. It's honestly kind of similar to where whenever an insured, right, we're hired on behalf of the insurance company in my particular role. And so when we're talking with the owners of the dealership or that point person, as you recommended, and I agree with that recommendation, when we're talking to that person, if there's a question, is this covered? Is it not? Should I include this? Not being the ones that own the policy or that are capable of interpreting that policy, that's up to the carrier. What we often say is, yes, submit it. We'll review the information. We'll put it into a bucket and at least explain that to the insurance carrier, the insurance adjuster, to see, is there coverage for that? And if not, they'll be able to convey that over to you as to why and what could be included or what could not. But if ever there's a question, I would say, err on the side of caution. If you're tracking it, if you feel that it is, in relation to the loss event caused directly by it, then submit that as part of your claim and then allow for someone to determine the coverage and speak to you about that coverage.
All right. Well, Tom Garvey, that kind of leads us into my next question that I want to direct specifically to you, because you've seen claims, you look at claims, you analyze claims. So what are the things that you typically in the auto industry see in the claim for the dealership that has a natural disaster? And what are things that you think a dealer might want to be aware of?
Sure. So we are on the receiving end of the insurance claims, as you mentioned, right? And that's typically 3 different categories are what we see. The first being business interruption or business income loss. That handles the loss of sales and loss of profits aspect. Then there's extra expense, which basically, as a simple definition, is any expenses incurred over and above normal in the normal course of business. And the third would be property damage. So that's that physical damage of, let's say a tree came down and damaged an awning or something, and here's the cost to repair that or replace it. So within those three buckets, property damage, oftentimes the insurance carrier will handle that themselves, or the insurance adjuster will, because we might be asked to gather the invoices, gather the information. We'll put it in a spreadsheet for them to be able to understand, here's the total cost of it, make sure everything's included and everyone's on the same page as to what's in there. But we're not ones that'll say that is a good cost for repairing or replacing an awning, or that's how much it costs to replace the glass at the front of the building or anything. That's for them and for somebody else to really determine. The extra expense side can really, as I said, it's anything over and above normal. So Tom Kline, you mentioned some of these with that portable office, right? If there's a temporary office that you can bring in and have it there, so you're paying rent for that trailer, that could be an extra expense, and likely would be an extra expense for the monthly cost of that rental. Let's say your power is out. Let's say a hurricane came through and wiped out the power, but you have a generator on site to try to keep the power running so you can operate. Well, the rental of that generator, the fuel that goes into that generator, that's all over and above normal as well. So those are some of the things that we would see as far as extra expense that are a little bit more clear cut. You don't have this normally, but now you do. And that's really to help mitigate your losses and to keep things up and running. But one that, may not be as easily known or as easily explained would be labor. So, Tom Kline also mentioned the trying to keep people on, right? That would be referred to as ordinary payroll coverage, right? So where you're not exactly working, but you're trying to keep them on staff so they're not going elsewhere, but you're trying to pay them their normal wage so that way they don't have a loss because the location was down. Now, I'll always defer to the insurance carrier as far as what coverage is there for that. Oftentimes there's limits to that, 30 days or 90 days of the amount of ordinary payroll, but there typically is a section that would cover that. So definitely check with your insurance professional, see if that is something that you do have. But as far as the additional expenses would go, think about if you're paying someone more overtime, or if you're paying someone more than normal to either help with cleanup or to help with the recovery, if you're trying to take on some more work to try to keep the office running, and let's say your hourly individuals that are doing invoicing or that are working on writing up deals, if there's overtime incurred that would not normally have been incurred, well, then that would be something that we would see as well.
So when you say overtime, I mean, that's how can a dealer not justify, but substantiate that this overtime was above and beyond what they've normally would had to do because of this disaster? What is something that they would have to do that you guys would look at and say, yes, this makes sense, or no, they're just trying to get extra funds out of the insurance?
Yeah, so it would just really be the payroll records for the business. Now, when we think about, over and above normal or overtime for this instance, it's important to think about the named insured on the policy. It's going to be the dealer as a whole, right? In this example, where it has to be an expense, in this case, overtime expense, over and above normal for the dealer, to where if we're looking at we always call it a pre-loss or a base period, we might do a look back of 4, 6, or 8 weeks leading up to the loss event to say, what's our normal payroll? What's the normal overtime, if any, that is being incurred for this particular department or these individuals? We would then look at what happened during the loss period. What is that payroll? Is it about the same? Did it go down where there's now a savings, or is it higher because of X, Y, or Z reason? And we would merely look at the comparison between those two and say, is what was incurred during the loss period higher than normal? If so, well, then it's a possibility that it's an extra expense. And what we want to make sure of also with this is that we're speaking with the insured entity, with the dealership, to make sure that that base period we're looking at is proper, right? That there's nothing, we don't want to look at a holiday within there where the payroll goes down as far as the amount of time that people are working, or if there's large vacations or anything in it. We don't want to look at a period that's going to be lower or higher for that matter, that would impact our calculation during the loss period. So it's important to have that back and forth to make sure we're looking at the proper periods both before and during the loss event.
All right, great insight. So for both of you, you can take your turns on the answer to this one if you choose, but any final words of wisdom as to what our dealers should or should not do after a disaster occurs? Tom Kline?
Yeah, I would say the best thing you can do is prepare before the disaster so you know how you're going to handle it. Because after, you should just be executing your plan.
Okay, so
I think it's important to spend time thinking about the what ifs. What if this happened, and how, and what coverage would we have, and how does that look? And the time to do that is not 2 days before your insurance renewal, right? You have to get that. You have to get these things 60 days ahead of time. If you don't get your quote 60 days ahead of time, you can't the human brain can't possibly conceive of all of the items that are in a garage policy to try to figure out which limits are good and which ones aren't. And it requires some time and some energy. So that's what I would say, is spend some time with your insurance professionals, and make sure that you've got what you need to have.
Okay, and so go back to the October Up to Speed edition and review that first, and then talk to the insurance companies, right? All right, Tom Garvey, anything for you?
Yeah, from the claims perspective, as far as, as that's my, that's where I'm typically brought in, right, is on the claim side of things. So from that perspective, it would be, make sure you have the adequate documentation. We can only rely on what we can actually review. So if there's an expense, or if there's something that, typically happens, but I don't have any support for that, I don't have an invoice, or we don't really treat it on the books the right way, whatever it might be, people do things differently, but we're at the mercy of the information available. So keep that in mind. Keep good books and records. It's only going to help in these processes.
Okay.
But then also to make sure to ask questions. Whenever I am brought in on any type of engagement, I always say to the business owners, just let us know if you have questions. We'll at least point you in the right direction. Is this best for the carrier and for the adjuster, or can we answer it for you? And to make sure that they understand what the calculation is. A business interruption calculation, there's a lot of variability to it. There's assumptions built in there. Make sure you understand that, because if you don't understand it, then I'm not doing my job, as on this side of things, to where you should be understanding it and comfortable with those calculations, because it shouldn't just happen in a vacuum. It should happen with all the individuals involved to make sure everyone knows what's going on.
All right, perfect. Great insight. So that concludes today's Up to Speed video, and I thank you, Tom and Tom, both for giving us some insight in this Up to Speed series on disaster recovery. Appreciate your time and your wisdom.
Great to be with you, Mike.
So to our audience, thank you for joining us today. And if you have any questions for our speakers, their contact information will display on the screen. Please feel free to reach out to them directly. We look forward to seeing you on our next Up to Speed episode on December 20th. And remember, we arrive in your mailbox the third Wednesday of every month. And you can also visit our website at www.bakertilly.com/dealerships to view past episodes of Up to Speed. Thank you, and make it a great day.